The math of a personal account is fixed. A $5,000 account means your maximum loss is exactly $5,000. You carry 100% of the risk of ruin, and even a high return often fails to generate enough profit to justify the effort. Compare that to a six-figure prop firm account. The firm provides the capital, and you only risk a one-time evaluation fee. They absorb all actual market losses, while you keep 80 to 90% of the generated profits. This creates a contradiction. If the financial upside is this significant, and the personal downside is capped at a single fee, why do the vast majority of traders fail to secure or keep a funded account? A $100,000 account is not a gift. It's the prize at the end of an obstacle course defined by inflexible rules. These constraints protect the firm's balance sheet by exposing strategic weaknesses that a personal account might otherwise hide. Prop trading functions as a sophisticated, tech-driven filtration system. It is calibrated to weed out gamblers and identify the small percentage of traders who can systematically manage risk under pressure. Securing that capital requires navigating a standard two-step evaluation. You start with the Phase 1 challenge, and if you survive that, you move into the Phase 2 verification. To prove offensive capability, traders must hit specific profit targets within a set time frame. You might need to generate an 8% profit in the first phase and a 5% profit in the second. This line chart maps out a typical 30-day evaluation timeline. You can see the 8% profit target sitting high above the starting balance, but the real test is the 5% daily loss limit positioned right beneath it. The profit target is the goal, but survival depends on the drawdown. That 5% limit operates on a high watermark. If an account starts at $102,000 and the equity dips below the 5% threshold for a single second midday, the system locks them out. The challenge is over, even if the trade eventually bounces back into profit. We are far removed from the days of risk managers shouting across the floor of a chaotic stock exchange to force a trader to cut a loss. Today, these strict parameters are enforced by cold, instant, algorithmic execution. The fear of losing their own personal savings disappears, but it is replaced by an equally paralyzing fear, losing the funded account. Trading someone else's money under strict constraints creates severe performance anxiety. Every position feels scrutinized because a simple rule violation, like holding a trade through a major news event, results in instant disqualification. This pressure peaks near the drawdown limits. If a trader is down 4% on the day against a strict 5% limit, the urge to execute a high-risk revenge trade just to get back to break-even is overwhelming. Giving in to that panic and over-leveraging near the limit causes an emotional breakdown. This specific behavioral failure is exactly what the firm's system is built to catch and eliminate. This interface illustrates how modern prop firms deploy AI and machine learning to manage their own risk. They analyze thousands of traders simultaneously to flag specific behavioral biases, like the tendency to hold losing trades too long. The hardest opponent to beat in a prop firm challenge isn't the Forex market. It is the trader's own psychological fragility when placed directly under the firm's microscope. Surviving this filter requires abandoning the retail mentality of chasing home run trades. Securing funding requires the same methodical consistency used by institutional desks. The process begins with strict due diligence. Traders must identify reputable, regulated firms with transparent rules to ensure they aren't paying a fee to enter a rigged maze. This graph highlights the necessary shift in execution. A retail strategy with high profit spikes but deep drawdowns will fail a prop challenge. Successful traders adapt, utilizing tools like multi-day VWAP setups to strictly cap downside exposure and stay within the daily drawdown limits. Professional execution demands a physically documented daily trading plan. This dictates maximum daily loss limits that are tighter than the firm's rules, providing a buffer against emotional collapse. To match the firm's analytical power, traders leverage advanced, tech-driven ecosystems to continuously refine their setups and maintain a technical edge against the firm's AI monitors. Securing and keeping a funded seat requires treating prop trading as a rigorous professional partnership. It is built on unshakable mental fortitude and a mastery of defensive strategy, not a lottery ticket.